America currently holds $1.77 trillion in student loan debt. That is more than credit card debt, more than auto loans. It is the second largest category of consumer debt in the United States, behind only mortgages. 43 million Americans carry it. The average borrower owes $37,853. At a standard 6.5% interest rate on a 10-year repayment plan, that borrower will pay back $51,500 total, $13,600 in interest alone. But most borrowers are not on a 10-year plan. The average actual repayment timeline is 21 years. At 21 years, the same $37,853 loan costs $67,000 to repay. That is 77 cents in interest for every dollar borrowed. For federal unsubsidized loans, which represent the majority of student debt, interest begins accruing the day the loan is disbursed. Not the day you graduate, not the day you get a job, day one. A student who takes 4 years to graduate has already accumulated thousands in interest before making a single payment. That interest capitalizes, meaning it is added to the principal balance. You then pay interest on top of interest. Here is the fact most borrowers do not know. In 1976, Congress removed student loans from standard bankruptcy protection. Before 1976, student loans, like credit card debt, medical debt, and business debt, could be discharged in bankruptcy. After 1976, they could not. In 1998, Congress made the restriction permanent for federal loans. In 2005, it was extended to private loans as well. Today, student loan debt is the only major category of consumer debt in the United States that cannot be discharged in bankruptcy under standard conditions. You can declare bankruptcy after a failed business, after a medical catastrophe, after financial collapse of any kind. Your student loans survive all of it. The technical standard for discharge requires proving undue hardship, a bar so high that fewer than 0.1% of borrowers who attempt it succeed. As of 2026, 5.3 million federal student loan borrowers are in default. In January 2026, the federal government resumed wage garnishment for defaulted borrowers, the first time since collections halted during COVID, in March 2020. The government can legally seize up to 15% of a borrower's after-tax income. No court order required, no lawsuit, no warning beyond a 30-day notice. Those are the numbers. $1.77 trillion outstanding, 43 million borrowers. Average repayment, 21 years. 5.3 million in default. Wage garnishment, 15%. Bankruptcy, not an option.